Among casino operators, there's no fixed classification of a whale. You just know a high roller when you see one and adjust accordingly. The Bank of Japan's involvement in the Tokyo stock market presents a similar test for the taxonomists. Since the end of 2010, the BoJ has been gobbling Tokyo-listed exchange-traded funds in whopper volumes as part of the quantitative and qualitative easing programme. The really big action, however, began last July when its annual ETF purchasing budget was raised to 6 trillion yen. Since then, the whale designation has seemed pretty obvious. The central bank grabs a minimum of 1.2 billion yen of ETFs every single trading day and lumbers in with single session buying bursts of 72 billion yen about 7 times every month. It has been a substantial cushion for the whole market. Last year, foreign investors were net sellers of 3 trillion yen of Japanese shares, a pace that might have decimated share prices if it had not been for the BoJ offsetting that with 4.3 trillion yen of ETF buying. Analysts who back the BoJ as whale thesis have put a figure on the effect this particular cetacean has had on the Nikkei 225 index, the benchmark on which, until last September, the majority of the bank's targeted ETFs were based. In the afternoons of days that the BoJ comes in as a major buyer, the index is about 14 basis points higher than on non-buying days. Since the annual quota was increased to 6 trillion, calculates Nomura, the BoJ has provided a cumulative boost to the Nikkei of about 1,400 points. Not so fast with the whale designation, say analysts at Societe Generale, who say that while the term is certainly tempting, their reading of movements in on-exchange volumes and bid-ask spreads on eligible ETFs and stocks revealed no obvious deterioration in liquidity. It may lurch like a whale, in other words, but its splash is surprisingly small. The answer may lie not in the practical effects of the BoJ, but of its psychological impact. A simple analysis of its purchasing patterns show that the BoJ reliably buys on market weakness. Of the 1,038 business days between April 2013 and March this year, there were 449 sessions when the market was down. The BoJ bought on more than half of them. The question is not whether the BoJ is a whale, but whether investors think they are swimming with one.